What's up, YouTube? It's Todd here with Tasty Tracker. So I wanted to start a small account challenge. Everybody's doing it, so why not? We'll see if I can keep this account going without blowing it up. I'm going to try to be a little bit more conservative. I have a larger account that I trade in primarily. So the benefit of having that is that I can see which positions are not doing well and which ones are doing well, and make decisions based on that accordingly for this account. So I can put on a position on my larger account and not have perfect timing, just kind of throw it on there, and it'll start to go against me a little bit. In fact, almost every time you put a position on, it will go against you immediately for the first whatever day or two if you're selling positions like I do primarily. So anyway, if I see that it's the position, we'll say, for example, is bullish and the stock goes down a bit, and it's getting to a resistance, but by that point my position in my larger account might be down $100, then I can come over to the smaller account and put a position on because it's at a support. I'm sorry, I said resistance, but it's at a support level. Then I can come over here and have better timing. So that is one benefit you'll get from having a larger account, where you don't have to be as exact and you can add to positions as needed. The other thing is, obviously, you can have more positions going on at times and larger positions. So again, those all add to the things where you don't have to be as exact as you have to be with a smaller account. So I'm not making any promises. With that other account, actually, at the moment, I'm going pretty aggressive. I wouldn't say I'm going crazy. I'm not gambling, but I'm not really holding back. And with this account, because it's so small and there's really not any wiggle room, you could sort of view it two ways: that it's so small that who cares if I lose $2,000. So I'm just going to go crazy and make wild bets. But I'd rather not blow up my account. And so losing $2,000 on my larger account isn't a big deal. That's something that I could do in a week or two. And because I have enough money there, that I'll just continually build my positions to have a better position, that when things do start going my way, I'll actually be further ahead. But in this account, I want to be a little bit more conservative. I don't want to blow it up, and I want to make sure that I don't have a large drawdown. So basically, for this challenge, I'll be doing weekly updates on my accounts, my account size, my net liquidity specifically, and what positions I have open at the moment, and then any positions I closed and opened over the week. I will be very shortly releasing a watch list on tastytracker.com, and then after that I'm going to have trade alerts, and I'll do alerts for my small account as well as my large account. So at that point, maybe 2 or 3 weeks, you'll be able to follow along in real time as I open and close positions, but for now you'll just have to get weekly updates on how I'm doing. But I will go over each position, and unfortunately, Tastyworks, after hours, their charts don't like to load always, so it's spotty whether it works or not. And apparently my internet's going really slow. Okay, so I thought if I refreshed, maybe the beta waiting at the top here will load. I'm not holding my breath. Anyway, at this point, you can see my account balance is just over 2,000, but we're going to call it 2,000, and the challenge will be from 2K to 10K. When I hit the 10K, then will be actually opening up another account, and I'll do another 2 to 10 challenge, and I'll keep doing that forever. And then I'll use this account actually to take all of the proceeds each cycle and dump it into this account. So I'll have a separate account that's always starting at 2K, or maybe next time I'll do it at 1K. So right now, all the positions I have on are bullish positions. I sell spreads primarily here, and that's to allow time decay theta to work in my favor. And with the bullish market we've had, especially the last year, with SPY being up 30%, makes a whole lot of sense right now to be bullish until we get clear indicators that the tides have changed. And when you're selling put spreads in order to have a bullish position, you remember that if the stock stays flat, you still win. So I actually have two positions that are going to expire tomorrow. That's EIDX and SEDG. They're both 99% chance of winning. So basically, I will get the full value tomorrow. Trying to look here. The view right now is a little bit different. So yeah, okay. So the trade price was 181 for SEDG and 116 for EIDX. All my positions are $500, or I should say 5 strikes wide, which means the total sum is $500 minus the credit received, 116. So had I lost that, I would have lost 4 something, or 375, or 385. So so each one's going to be 5 wide. I use my watch list, which it's available right now, but it's not finished on Tasty Tracker. But I use that to pick out which stocks I want to get into, with the exception of a couple, such as Apple. Very bullish on Apple, even though I don't like their products. They're very solid financially, and they're buying back their stocks routinely, so it's driving the stock price up. So even with things like the coronavirus, etc., they're still making very, very good gains. Okay, so I have Apple, EIDX, ETR, that's a new position I put on today, MasterCard, and Sedge. They're all $5 wide. For the majority of these, I'm going to close at 50% of potential profit. If you hear any sounds, that's my dog I'm petting. But anyway, it just so happened that EIDX and Sedge weren't close to 50% when I originally opened them up. So how should I say this? I opened them up maybe 45 days ago, 30 days ago. I can tell you exactly here in a second, but once they weren't hitting 50%, and then I got into expiration month, which is February here, and at that point it's like, well, I might as well wait another 2 weeks and close it out for 100% instead of trying to hit 50%. So yes, technically they are more than 50% at the moment. The Tastyworks view is messed up here. Normally it will say I have the percentages listed, but anyway, these are both more than 50%, and normally I would have closed it out, but with being so close to expiration, there's more benefit to hold them. Normally you close out at 50% because you want to move on to the next position and make another 50%, because you can get 50% in typically 15 days. Okay, so I'm opening positions that have 45 days to expiration, and then in 15 days they hit 50%. There's no reason to keep them for another 30 days to get that remaining 15% when I can open up 2 new positions in that time period. Okay, so I don't think there's anything else here to cover. We can go over to Tasty Tracker and we'll look at these positions one by one. So I already said I have EIDX and SEDG that expire tomorrow. They are the 45 and the 50 strike and the 95 and the 100 strike. I have one contract in both of those. For all of these, they're going to be one contract, so I can try to diversify as much as I can. You also notice that I have my expirations spread out, so that way if something happens on the short term, it might screw up EIDX and Sedge and maybe Apple, but the market should recover in time for my MasterCard and ETR positions to pan out. So if you have everything in one expiration, you might be able to get a lot of money quicker, but you're not going to, or you're going to risk blowing up your account more. So yeah, and in my larger account, I have some hedging done, but in this account, because it's so small, I don't have any hedging on here. So I am a little bit more susceptible. But yeah, okay, so I have one contract at 116, which means I'm risking 384. And for Sedge, I have one contract at 181, which means I'm risking 319. They're both put verticals. If I expand that a little bit, since I'm using Tastyworks, the commission is around $2.30. The width is 5, and then here I have the percentage gains. 114 would be 0%. So you notice it takes 116 and then minus the commission, and that's what I would need to break even, would be to close it for 114. But I'm aiming for 57. Typically speaking, again, for these two specifically, I'm not. But for these three down here, I have a 50% close closing order already set up. My break even here is 48.84, and I think we're at like 52 for this. And Sedge had really good earnings a couple days ago, and so it's not even, it's nowhere close to 98. I think it's like 110 or 115 or something like that. So I have some of my old comments here. So yeah, you can see this one I opened up 49 days ago. I pick the expiration basically where I can get premium that I'm happy with. So even at 50 days to expiration, I still only got 116. It might have been at a lower percentage in the money. So let me get out of here. No, I don't have a note saying. Usually I put a note on what the percentage in the money was. Okay, so for Sedge, I've had that for 37 days. Okay, so I don't think there's anything else there I really need to go over. For Apple, I've had that for 14 days already. For MasterCard, I've had that for 2 days, and then ETR I opened up today, like I said. So you can pause the video if you want to take a look at the different positions, but at this point, like I said, they're all 5%. I did this exact same trade or similar trade in my larger account. It's more aggressive in my larger account because if I lose it over there, it's not as detrimental. But the plus side there is I collected more premium, substantially more premium. So it's sort of this thing where things go exponential, where on a smaller account, it takes really long to get started because you're being safer. If you went crazy, then yeah, you could get it done rather quickly, but then things could go wrong quicker. So I'm trying to be more conservative, and on my larger IRA account, I think I got the 130, 135 position. So or it might have even been the 135, 140. So I collected a lot more premium for the same $5 wide spread. Okay, so yeah, so these are all going to be swing trades. I know a lot of people do day trading, and you can't really follow along with those. You can just sort of watch them and be envious of their skill. I do think day trading is something that takes a lot of talent. All of these trades don't really take any talent, and they don't take time to set up, and you don't need to watch them. So it's really good to get into swing trading options if you don't have a lot of time, or you don't have a lot of money, or you want to be safer with your account. I do day trade options a little bit, and those are riskier and they require more skill, but then they have a higher rate of return if you're good. If you're not good, then you end up blowing up your account. So the bulk of what I'm doing is swing trading, and I definitely think that's where you should start. But like I said, for right now, you'll just be watching my progress from week to week. And then in a couple weeks here, I'll announce when I have my trade alerts, and then you can subscribe to Tasty Tracker at that point if you want to, and follow along. And it's going to be included in the regular price. So if you're already a member of Tasty Tracker, you'll just start getting that along with the new watch list scanner that I built, all for the same $9.99 a month, $9.99 a month. So there's really no reason to not sign up. But anyway, so keep your eyes out. Look forward for videos coming up, starting 2K to 10K. Thanks. Bye.